Hello, ladies and gentlemen. Welcome to Altcoin Buzz Trading. Today we're going to talk about Bitcoin, Ethereum, Rune, Shiba Swap, and stay tuned for your TA tip of the day. All right, let's get right to it. So we got BTC here, which has broken a large uptrend that we've been in for a while. Now we're sitting in a bear flag scenario. One thing kind of stopping BTC from moving dramatically lower right now is a very bottomed out RSI. I'm not a huge believer in the RSI, but I do want to say that if you look back in Bitcoin's history, we generally don't get huge moves after, at least huge downside moves, after we're already completely bottomed out in the RSI. If you look at this, we can have sustained bounces. But this is a very interesting point in the market cycle, though, because just coming out of a move like this, where we've been in an uptrend for quite a while, to have such a bottomed out RSI, I tend to believe the charts more than the RSI. So at this point in time, if you're looking at a short, I don't think that's such a bad thing. And I think you should take that bias to the market, okay? Is the downside bias. You want to believe that. But especially with alts, maybe not even with BTC. Maybe you let BTC chop around a little bit or off this RSI point. All it really has to do is get to 30 or 40 on the RSI and it's ready to go back to the downside. So we could chop here for a while in Bitcoin. But the main thing, and which is why everyone starts with BTC, is because BTC leads the market cycle in altcoins. And right now, it's telling us that the whole market is in a bearish market cycle at the moment. Okay, so we have to believe that when we see it. All right, next up, let's take a look at Ethereum, which is also in a bearish market cycle. Ethereum here also broke on a long-standing uptrend. Trendline been going on here all the way since November of last year. When something like that starts to break, when a trend line like that starts to break down, you have to pay attention. And Ethereum breaking down here, moving down to recent lows, actually undercutting recent lows. And what you'll find here is potential bear flag. So we have a bear flag in Ethereum. Although the RSI is also bottomed out in Ethereum, they're both going to go together. So if the market does try to break down, Bitcoin and Ethereum both could drop, even though the RSI is bottomed out. And it could take a couple of weeks for us to maybe wear this out where we're comfortable moving lower. But if you're looking for a big trade, that's usually where altcoins come into the play. So let's take a look at Rune. Now, Rune is an interesting one. Speaking of the downtrend, Rune lately said what downtrend and basically started going up in good volume too. You can see here the volume came in dramatic fashion, even in the middle of this uptrend here. So here's your early uptrend. You move to a middle uptrend and then you get kind of more mature in the cycle up here. But it's been holding this trend line this entire time. Let's dig down to the 2 hour. I can show you a little bit more about what's been going on with Rune. So there's your early volume stepping in. There's your intermediary volume. Now I have my volume aggregation tool here. Now what the volume aggregation tool does is it kind of takes all the bars and adds up the buying bars and the selling bars separate so you can see what's happening. Well, if you notice, I've got my orange, which is my selling bars, and my green, which is my buying bars. Which is more prevalent here? Looks like the orange bars to me. So been waiting for Rune to break down. Thought it would break down here. It didn't. It popped up again. And it actually gave us something interesting, a very high volume topping candle. So in my opinion, Rune is setting up as a better short than a long right now. And as with a lot of cryptos, when something has a long uptrend, it can come all the way back down. So there's a good potential for Rune to come all the way back down here. Now, I know I kind of just gave you some goosebumps thinking you could make a lot of money, and it may work out. But one thing to know about trading, and this is your TA tip of the day, you need to wait for your entry. You have to wait for your entry. You can't just jump in because something looks good. Rune looked good for a short over here, but it never confirmed. It never broke the trend line. And in this particular situation, the trend line is our signal for an entry. So because it didn't break, we're waiting for it. Well, when it bounced over here, or when it looked like it was going to go down, we were waiting for a break, but it never happened, okay? It bounced, bounce, 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 bounce. So tries to break here, bounces again. And then you end up with a topping candle. So now we're revisiting the trend line. You want to wait for a good definitive break so you know that the trend is truly done. And Rune has actually been resilient in the trend, and it's likely due to that amazing volume down low here. Now, if you kind of see where that volume's kind of stopped coming in, it was right about this level at the 117.5, right? So here's kind of your early uptrend. You start to rally. Here you get your first kind of big volume selling candle, and that's where the red kind of starts to poke in at the chart. So when we're looking at a trade on Rune, first of all, you're looking for a large break to the downside, which we don't have yet. We're waiting for that. If you want to watch a chart, I think Rune could be a chart to put on a watch list. And you want to watch for a big downtrend. And in terms of a stop loss, you always want to have a good stop loss. So let's say Rune breaks up here, and your target is all the way down here. Okay, well, where do you put your stop loss? First of all, we currently have a prior high here, and that's your spike on my 2-hour time frame. Now, you could move that lower into the closes right there at about the 185, and we're a little bit off of that on our plan list here. So that's a 9% stop loss. I don't like to go much past 8%. So if this does work out, one way you can mitigate that is take a bit of a smaller position size. Let's say you trade on average $1,000. Maybe you trade $750 on this particular trade to mitigate that loss, because you want to have your stop loss be where it needs to be on the chart. It shouldn't. Your stop loss shouldn't relate to how much money you want to lose, because the market doesn't care how much you want to lose. It only cares about where it's going to go. So you want to put your stop at a good place on the chart. And this is a good place on the chart, okay? So let's say your entry is here, and obviously this is in the future. I don't know when exactly this entry is going to be, but this looks like a 3.35 risk-reward trade. That's a very good risk-reward trade, but you have to wait for the break, all right? All right, now next up, let's take a look at Shiba Inu. So Shiba, let me back out to the daily time frame for Shiba, because there's a nice story behind this, and I got a couple of lines on my chart I want to explain. So first off, I already have our trade set up. Potential trade set up. I do want to say potential. Nothing's guaranteed in the markets. Shiba actually had a pretty nice cup and handle pattern here that did break out, oddly enough. Even in the market cycle we were in, it did break out. But now we're breaking down. So you go from strength into weakness, and that's perfectly fine, right? So we're going into strength. Now we're moving into weakness, and this has what's called an H pattern. An H pattern is when it comes down and kind of forms a lowercase h. And that's kind of what we have here. So let me get rid of these. And one thing I do want to show you is how to manage this. This one's a little tricky though, because you have this big wick to the downside. So you're like, Randy, why do you have your green thing right there? Well, I'll show you in a second. Show you right now. What I want to show you is that these lower time frames can sometimes give you some insight into very, very large candles and wicks on the daily time frame. So I'm going to go ahead and put the entry for this trade at the close on my 2-hour time frame. So that's the entry for the trade, and the stop loss right now is actually a little bit high. It should be right down here. You want to give yourself a little bit, because our stop is right here. Our stop is right across a prior high. So we just had a little mini breakdown. If the market breaks down sooner, this is going to be your stop. If the market comes down to here and bounces up, first of all, you're not going to take this trade because you're not going to enter early. The second thing that's going to happen is we're probably going to have a different stop loss. So if you like this trade, and if I don't circle back to it, the way to manage this is you can manage your risk appropriately. If the market comes down and bounces, and then comes over here and then chops and then tries to go, your trade then becomes this, okay? You want to be above the highs here. Your entrance could still be at the same place, but what happens is your risk gets smaller. You end up with about a 3% stop loss. That's a very manageable stop loss for something that has a high potential reward. So I've just told you how to kind of manage the exit for the trade. I'm leading with exits because exits are very important. You want to know when the trade is nullified, and this trade could be nullified on a break of a prior high like that. If it breaks down and then reverses, you have to wait for the breakdown, and then you have to wait for it to reverse. All right. Now, in terms of a target, this has one of the larger targets that we're probably going to see in the market right now. In an H pattern, you can take what's called a measured move. And I have the measured move coming from a large decline here. I'm not going all the way to the top because I don't want to be greedy. And this is already a pretty exacerbated move, and it's actually moving down in towards the lows here. If you see this prior candle, I actually didn't plan that. That just worked out that way. So what you'll see here is that I took this steep decline and I moved it to our entrance point. Okay, moved it to our entrance point, and actually my current, I drew that a little bit ago. You know, I'm good because I don't want to be greedy, and this is a good lesson for you guys. Be less greedy and take an earlier exit. So this exit is about 28% for a 9-to-1 risk reward if it plays out in this scenario. So let's just go back up to where we're at now. This is a, you know, about a 6% stop and a 4.39 risk reward ratio. That's definitely something that you can do stop loss wise. 6% is fully manageable. Let's go to the 2-hour. I'm just going to tighten this thing up. Yeah, I like that. That's not a bad stop loss for right now. Now, like I said, if this thing ends up moving lower, putting in some lower highs, you want to move this. You want to move your stop loss. You want to stay with the trend. There we go. You want to stay with the trend. So if we move lower, consolidate again, you can move this stop loss. And it's okay to move your stop loss before you get your entry because you want to have these trades planned out ahead of time. All right, ladies and gentlemen, so there you go, a couple of altcoins. We took a look at ETH and BTC, and I'll see you guys next time in Altcoin Buzz Trading.